An intense focus on product at its core has led Thursday Boot to be a successful eight-figure brand. How they navigating tariffs and supply chain, balancing growth with operational complexity, all these things and more today on the show with Connor Wilson from Thursday Boot. Welcome to In the Money, an exploration of whether you can still make money in D2C and CPG. We follow the flow of money between founders, investors, lenders, and everyone else in the ecosystem to ultimately answer the question, is D2C and CPG still a good business? Hope you'll enjoy the show. Connor, you've got 1 million Instagram followers at Thursday Boot. You take a quick scroll of your socials. You've got Kendall Jenner and Miles Teller. In the past, you've had people like Barack Obama and Dwayne Johnson, The Rock. How does that happen?
I mean, we've been doing this for a long time. We're 11 years as a business, and I think classically, like a lot of people focus so much on the window dressing, and they sometimes confuse the outputs with the inputs. In this case, if you build good product and you build out good customer service and content, and all the 20,000 other things that happen in building a business, if you do it well, people will come to you, and that includes your friends, your family, the neighbor down the street, but sometimes celebrities too. And it's something that I think we celebrate. We're excited about it, but it's not a core business driver for us. It's just something that is an output of all the hard work that we've been putting in for years and years and years. And it's just nice to kind of validate after the fact. But I would definitely say it's something we're pleased to have that kind of participation, but it's never been what we've ever been about. We focus more just on our customers day to day. And some of them happen to have very interesting day jobs.
That's kind of incredible. Like, just to push on that a little bit, you're saying, I think some brands will pay Kendall Jenner $100,000, few $100,000 to get product on her, and you're not doing that. She just focus on a great product, and people need to wear clothes and boots.
To be fair, we definitely do work with folks to try to get these in front of people so that when a movie's being shot or something, we have an opportunity. But using like President Obama as an example, we don't know how he got them, but he purchased them. Someone purchased them on his behalf, and that's like the ultimate. That's the ultimate way to do it. And I think we don't have a business model that allows us to. We can't afford to do a very heavy paid influencer strategy. I know it works for other brands. I'm always interested to see how it works and would love to learn from that. It's just not something that we have in our toolkit today. So we try to play to our strengths and our unique competitive advantages. I think that is, frankly, comes down to a high quality product, really approachable price points, and then really consistent customer service. And so those are the three things that, again, they're very basic, but that's what we do best. And then as an output, every once in a while, we kind of catch a little bit of a star. But it's not our core thing. It's just a nice little frosting on top of the cake.
1 million Instagram followers for a brand is not easy to do. Maybe talk about the machine behind that.
It's not going to be very satisfying. I think the hard thing that you hear from people is, we had this one weird trick and we went viral with this one video, and I've certainly seen it. And I am, again, appreciative of those brands that are able to do it. Our own story has been, frankly, just the consistency of just try to get a little bit better every day. I can remember when our very first posts were us going around with our first DSLR camera, taking photos of each other around Washington Square Park, and hoping that those photos were good enough to encourage people to engage with us. And we evolved, and we started reaching out to other folks that were better at photography, that were better at styling, that were able to showcase those product stories in ways that I just don't have the creative flair for. And so every day, every week, you just get a little bit better, and more people pay attention. And then, you kind of blink your eyes and it's 1 million. And again, 1 million's awesome, but it's also like not 5 million and it's not 10 million. And so there's always room to grow. And I think if you focus too much on the number, you don't focus on what goes into it. What goes into it is a highly data-driven, iterative process that just ultimately fundamentally comes down to, are we really serving our customers things that are engaging and compelling in a way that they want to be part of it? And if so, then we gain followers. And if not, then we don't. And a lot of that kind of works into how we view the business and how we run our business in general.
I just want to make sure that for the brands that are listening, you talked about great product, great price, great customer service as the pillars. And that for some brands, they might say, I either have that or maybe I'm on my way there. but having the positioning, the creativity to create that content engine to be relevant, to stay top of mind, whether through meta or kind of social specifically, um, that has to be a huge part of the business. Or is it really just focusing on the three fundamentals and the market's kind of pulled it along?
It's, I think again, there's this propensity to focus on like one or two things, or that maybe the things that are most visible, and marketing's visible, but it's interesting because it's actually a fraction of our total business. It's not to say it's not important. We have an excellent CMO, great content team. We work really hard to get good at it, but we don't work any harder there than we do at any other part across the business, whether that's the grindy, boring stuff of logistics and again, customer care, manufacturing. We have our own factory in Mexico. We just take all that stuff super seriously. And the thought is you have to be good at like 20 or 30 different kind of core capabilities, and you have to be consistently getting better at all of them. If you are not doing that, you are leaving yourself exposed in some way, shape, or form, or you're leaving potential opportunity on the table. And I don't think it's fair to make, one part of the business work harder than all the others. And I bet if we went in and dug into like the marketing and content stack too, it's even grindier than all the other stuff too. It's just this idea that every week we think about what did we learn? What did we do well? What do we do poorly? What do we need to do better next week? And so I think it's probably more visible. You can see the website, you can see our Instagram, and you get a feel for what the brand is, which is great because we're communicating it clearly. And the value proposition, if that's coming across, then great, we're doing our job really well. But I just view marketing, and it's not it's just one thing that we do. And it's such an easy thing for folks to focus on. But I promise if the product wasn't sufficient for the marketing, we would have gone out of business a long time ago.
Today, I want to tell you about Move Supply Chain. We recently engaged them to look at additional options outside of Vietnam when the 46% tariffs were slapped on for our accessories business. They go and run an RFP process with dozens of manufacturers to get you sample ready on at least 2 backup vendors. Their operations team is based out of the Philippines, so an affordable cost, but as importantly, they're on the same time zone as our target Asian manufacturers. Move Supply Chain has deep supply chain experience with Western brands, including many CPG and D2C startups that you would know. We love working with them. MoveSupplyChain.com. Go check it out. And Connor, if I read between the lines, is there some rejection on your part of maybe brand building has gotten too marketing, there's too much riz, and hey, you just have a whole cohort, a whole generation even, performance marketers selling sub quality products at too high of a prices with bad customer care?
I don't want to get in trouble. Look, I'm a product person first, okay, and that's why we started the business. My co-founder Nolan and I, we were, in our late 20s. We didn't have a ton of money. We really hated the opportunities in the boot market. There was stuff that was either way too like work heavy or way too like European fancy. It was all overpriced. It wasn't versatile. It wasn't comfortable. And we just had this kind of thought of like, there's a Cinderella opportunity here to combine all the best elements. It's durable. It's sophisticated. It's versatile. It's comfortable. And because of what was happening direct to consumer, we could also offer it at, frankly, like a very competitive, compelling price that we didn't have the capital to otherwise, get into this industry. So we didn't have the experience. My dad didn't own a factory, so I had to figure it out. And so the way we always looked at it was like, we're building for ourselves. And I don't want to say what other brands are doing or to critique them necessarily because I just don't know. But I do think a lot of founders often overlook the core promise of product. And the best founders, the ones that I look up to and the ones that I try to really emulate, are those that are just like just insane about it. And that can be, from the most minuscule details. We've redesigned our products so many times over. We've gotten in trouble for doing it sometimes and arguably shot ourselves in the foot a few times, but it was always with the intent of improvement, improvement, improvement. And if your product stinks, you just don't really have a foundation for your business. I don't care how good your marketing is. In some ways, it actually works against you. You market too heavily and then you're selling an inferior product, or your prices are too high and you're really kind of taking advantage of your customers. We just don't think that way. It's product first and foremost. Marketing is a way to get the word out and make it known. But part of that's also, and then also product is one thing, but also you have to couple that with service. If you don't have a great customer experience, you're also going to leave yourself open to other issues. So our view really is like, I want that experience to be excellent for the customer. If I can do that, then they're going to come back to me. They'll have a pair of boots that they wear for 3 or 4 years, and they might get them resold, but hopefully when they're in the market for another pair, they'll come back to me. And that is something that you can only earn through trust and like a lot of hard work. And if you think you can shortcut that, one, I think you're wrong, or two, I haven't learned the way to do it, and I think there's a lot of pride that we take in our willingness to like just continually dig deeper, deeper, deeper. Spend a lot of time at the office, spend a lot of late nights focusing on the things that people don't want to do, and really using that to propel ourselves forward.
I think product is maybe a good segue into tariffs, where now kind of end of April, there's already been the whiplash. Yeah, how have the last couple of weeks been for you, and how is planning going, for the next couple of months?
Short answer is it's required us to spend a lot of time on scenario planning, which means a lot of time and effort without necessarily any output or productive outcome to point to. We're working especially hard to figure out how do we protect our customers in any case, in any scenario. The short answer is and we produce, for context, we're producing in the US, in Mexico, Spain, Portugal, and we will start adding a little bit to Vietnam. And we've always looked at this not from a country or a cost basis, but more where can you find the best factories that are going to build the best version of the product that you want to offer. Some factories are great at dress shoes, others are great at apparel, obviously, or at sneakers. And you can then, if you have a great product, then you can price it to a point where it makes sense. And we've really been building our business for scale so that we don't have to be if this makes any sense, it don't have to be as price sensitive. It's more about being product driven, and then we find a way to price it so the product is very competitive regardless. And so it's nice to have some flexibility in the sense that we are a little bit more diversified relative to some folks that might, for instance, have a single factory. But it doesn't make our job all that easier because some of these goods are going to be harder to transfer. And net, if nothing changes, we would expect that the cost of goods goes up. And if the cost of goods goes up, there's just some tough decisions that have to be made. Our guiding light on this is making sure two things: one, that we are still like being protective of our customers and making sure that whatever we're offering is at the greatest affordable price without sacrificing quality. That's super important to us. And two is making sure, secondarily, that we are still able to operate this business sustainably. And so we do have an eye on making sure, it's not about the short term profitability of the business. It's about the long-term profitability of the business. And part of this is hoping that, we'll see a bit more rationality in terms of the policy mix. In the meantime, we're just prepared for any kind of thing that comes about. And it's not a fun place to be, but we feel pretty fortunate for the fact that we think that we're going to be in a good position to help our customers and our business in any scenario.
I think I saw one of your ads. It's like, Arizona iced tea, Costco hot dogs, and Thursday boot are all anti-inflation. How is that kind of why is that an important pillar to you? And is that even possible going forward?
Yeah, I think it's so. Let's just be clear. We've since we launched in 2014, the CPI cumulatively has gone up like 34%, meaning that the 199 boot that we launched with in 2014, that should be over $250 just baseline, right? But we've been able to keep our pricing, and I think a lot of people don't really understand why that is. The assumption, of course, is you've somehow outsourced it or cut costs or you've cut the quality. It's actually the opposite. Like we've gotten so much better through literally just a decade of grinding. We know more about shoes than we ever did. And any mistakes we've made, they were honest ones in the sense that we just didn't know what we were doing yet, but we care intently about knowing what we're doing and doing the right thing. So one thing that's interesting is we've actually been able to improve the quality while lowering the price. And the reason, or no, lowering by keeping the price. And the way that we've been able to do that has been primarily through using economies of scale. And so a lot of folks will focus solely on gross margin. If my cost of goods goes up, I must increase my price to maintain my gross margin. And that's how you see a lot of the inflation-driven pricing increases a lot of other brands have led with. We certainly retain that as an option, and it may be something that we need to resort to at one point. But our North Star light has always been what do we do to make sure that our customers are always number one? They have to be taken care of first. And with a little bit of creative thinking, you realize that gross margin is important, but it's only a part of the equation. What we really care about in the end is our profit margin in the end, net income. We need to make sure there's a profitable business so we can continue to succeed, and we need to make sure that we can last for a long time. But between gross margin and net income, gross profit, net income, you have other things like your SG&A, variable costs, other items that don't necessarily directly impact the quality of the product or the experience, but that if you can be more efficient on, or you can amortize that over a broader base, you can actually be more efficient. And so the short answer is that we have taken hits on the gross margin, and we've offset that by being more efficient in how we operate. And so when you get a pair of our boots, you may not appreciate the details that go into those carrier rate negotiations or what we pay with our payment processing. But we've worked really hard to find those efficiencies so that instead of just putting the cost burden on our customers, we're actually putting it on ourselves and forcing ourselves to be more efficient. And the belief there is that it's better for our customers long term, which means it's going to be better for us as a business. And we're also learning how to operate more efficiently as well too. And that is really key if you want to have a long-term competitive advantage. And we really have this goal of being the kind of de facto high quality standard that people reach for when they think of high quality leather goods, footwear, and apparel.
I had Debbie Way Mullen from Copper Cow Coffee on the pod recently, and she kind of highlighted and reminded me even of the changing consumer preferences over the decade that she's run the business. That specifically over the first 2/3, there was macroeconomic boom, then coupled with stimmy checks. So there was a lot of trial, a lot of premiumness. But for the last couple of years, it's much more about value, and people being conscious of discretionary spend. I'm curious, has consumer preference changed in the decade that you guys have been operating?
We've definitely seen it in, certain models will come in and out of favor year over year. We're fortunate. The bet is in the sense where it's tricky because we compete in a space that's very crowded and very competitive. It's the brown boot space, and our biggest disadvantage always was that we had competitors who had been around for 100 years, which could be really problematic because those guys should be hard to take down. But we actually viewed it as an advantage because they just haven't innovated very much, and they've been arguably a little bit cozy and a little bit lazy in some ways. So we love our legacy competitors for the fact that it's given us a lot of room to run. And but the challenge is sometimes that that standard core brown boot, there's not as much movement or change. We do see in other categories where there will be more fashion driven trends, and then also like on the value side of things. My view of this is that people always want value, period. And we even see that, and we've started by expanding some of our price points over time, where we've introduced different products and variations that are a little bit different from our core line. I'll use our Black Label as an example, which is limited edition, and I'd call it like hyper premium, that we're purchasing what are very expensive and exotic leathers from some of the best tanneries in the world. Even our core line, by the way, is using gold standard and US cattle, and it's like we've got great quality leather there. But I'm talking like shell cordovan, which is just absurdly expensive, and CF Stead, which makes some really unique and very expensive suedes. And what we've done there is we've proven that even at a kind of a premium, we can actually offer a very price competitive product. Again, because of how we built the business, we have certain competitive advantages and muscles that we really enjoy flexing because we can do anything we want to do. We've learned how to make the quality there. And what I've been interested in seeing is we have different customers that are looking for different products at different times, but everyone wants to know that they're getting a good deal. And I think one thing that's great about, instead of shifting towards where the trend is, by being just a consistent evergreen brand that focuses on high quality and high value, we're kind of always going to have that market, if that makes sense. So in some ways it's kind of coming to us, but also we haven't really changed. We're just trying to keep offering compelling new high quality products. And then when we do so, the goal is not to maximize gross margin. It's really to maximize customer satisfaction and sustainability of the business.
What I want to tell you about today is Parker credit cards. Look, there are multiple subreddits dedicated to credit cards, points hacking, and cashback, and I get that. But what do entrepreneurs really want in today's market? Helping managing their payback windows when acquisition starts ramping. With Parker credit cards, you get up to 90-day repayments on ad spend, so helping you on your cash conversion rather than having all that upfront ad spend before revenue starts coming in. Parker allows you to spend aggressively while still managing cash flow, including meta spend. So instead of hunting for best points or cashback programs, realize that the best ROI is to be able to increase your ad spend without hurting cash flow. Go and check them out. Parker credit cards at getparker.com. Parker is a financial technology company, not a bank. The Parker Commercial Credit MasterCard is issued by Patriot Bank N.A., member of FDIC, pursuant to license by MasterCard International Incorporated. Brown boots, and now there's also jackets, bags, handbags, white sneakers, shirts. Maybe if you could talk, pair the chronology of NPD with kind of the thinking alongside it.
The short version is we think that the timelessness of the brand is really based on like the versatility. Thursday is the unofficial start of the weekend. And so there are a lot of products that our customers are wearing. And we think about what is it in their closet that either they might want to see more of and or that they might not be getting serviced very well by other brands that are doing some of those things. So some of it comes into competency and what we're already good at. We started with men's boots. We went from men's boots to women's boots, men's and women's boots to men's dress shoes, sneakers for men and women, women's shoes. So some of that's just kind of moving out concentrically, and it makes sense based on our capabilities. Leather jackets, we're working with all these great tanneries already. We've got folks in the same cities that we're manufacturing boots who also focus and specialize on jackets. So let's try that. Our first run at jackets, we were super proud of, and we didn't hit the mark completely. We got torn apart by a very prominent blogger who since has actually become a collaborator, which is awesome. He's actually worked with us on one of our Black Label releases. And, you take it in stride. We're not thinking about this on a day-to-day. We're thinking about this in years and years and years. And when you're doing that, a few things. One, you kind of expand your horizons and you think more aggressively about what you could offer that could be valuable and compelling to your customer. We don't want to do anything that other people are doing better or that we don't think we could have some unique advantage in. It's just not worth it. Don't do it. But if we're doing our job well, we've reached a point where we've get permission from our customers to say, we trust you because we did a good job on my boots, and you know what, you did a good job on my sneakers, and I actually did a great job on my leather jacket, and we know that you're going to continue evolving and pushing, then yeah, I'll trust you on the shirts. And so one thing that's been really nice for us, and I think goes into the long-term nature of our outlook and our business, we have had customers ask for us, but we've also been given the permission. And, we do men's flannels, which is very different from leather boots, but we took it really seriously. We invested a ton of time and energy and effort into it, and the response has been excellent. And we're just getting started, and we'll see what the third and fourth and fifth and seventh iterations of those look like. And fast forward 5 and 10 years from now, and I have full confidence that, Thursday will have a whole range of different products that are going to be really high quality still. They're going to be really great value for our customers, and they'll still be cohesive and make sense. And what we've really tried to do is make it really, it's an organic, slow moving process, but we're really listening to our customers as well.
Can you talk about maybe the balance of new revenue with operational complexity? Because just the way you talk, and obviously we've known each other for a while, Connor, I know that you own so much brand trust with your customer that I'm sure when you launch a new product, there's going to be velocity. But it also adds a lot of operational complexity, whether on the supply chain, whether it's on the sizing and grading. So how do you, I guess, balance I know there's more revenue potential out there with, hang on, our team can only handle so much.
Yeah, we do our best is the short answer. I mean, and by our best, what I mean by that is like we burn the midnight oil. We really grind. Someone made the comment. They said, you still work like you're a 25-year-old working in investment banking, which I never did. But I took it as a compliment to say that I'm still going hard as if we were just in day one. And I think that mentality is really helpful, especially coming from the top. So us as founders, us as an executive team, us as like the long-lived employees of this business, like we all have an obligation to continue pushing hard. And if we're not, then like, why are we doing this? So I do, with some humility, I still think that we're still one of the hardest working teams in the business, and we take a lot of pride in that. I wish we didn't have to, Fortunately, I think that the complexity is real, and we try to use it as an opportunity to learn. We've definitely made mistakes along the way. I need to be clear, like, size grading is a good example, or getting really excited about a product, and then realizing afterwards, like, you get the feedback, like, damn, that was actually correct. Yeah, we made a mistake on that. But the good news is we have a business that is also flexible, and we can make those improvements, and we listen, and we take it really seriously. So that idea of, I think Churchill says, what success is not final and failure is not fatal. It's the will to continue that matters. We have a lot of will. And as the business gets bigger, it does get more complex, but there also are new opportunities and new levers that you can pull that you didn't before. I'll use as an example the fact, we went from fully contracting with third party factories when we first started, because that's the only way we could have done so. We now own and operate our largest factory in Mexico. And trust me, that is not without headaches and complaints and a lot of setbacks, but ultimately it's going to give us the opportunity to operate more efficiently, which means that we can continue to keep pricing down longer, which is beneficial for our customers. We can move faster, meaning we can get more products out sooner and be more flexible. And we can just get really, really, really good at quality manufacturing at a time when, even with tariffs and everything else happening, having that strategic asset is a benefit to our business. It comes with a ton of drawbacks, don't get me wrong. But ultimately, like, we're looking at this from how can we be as good as we possibly can be, and then we'll endure the pain along the way to get there. And maybe eventually one day it'll be less complex. But for now, it's just sort of like throw yourself into the breach and fight hard.
You have a few stores now. Walk us through the thinking there and maybe some of the learnings.
Stores are interesting. We've actually been experimenting with retail for a very long time. When we first got started, we would have people come into like our shared workspace at the Columbia Startup Lab, and they'd be like, "Can I buy shoes here?" And we said, "Sorry, we've got samples on our desk," and no, not really. But it would happen often enough that we realized there was a need and an interest. And when we first made a move to our own wholly owned office, we had a full floor in New York, expensive rent. We didn't want to pay all that, so we bifurcated it and we made the front into a little retail store to kind of like offset some of that rent was the idea, and start serving customers. And that gave us a little bit of learning of like, it was a very basic showroom, not much going on, but people really took off. We even caught Steve Madden one day in our showroom lurking around. So it was a very popular place. And that has expanded where now that showroom, which used to be on the sixth floor, is now a full floor on the second floor here. We've added in from one store that's been operating here for 5 years in its current location. We now have 3 stores where we're in New Jersey and Garden State Plaza. We're in Wicker Park, Chicago. We're downtown in Soho, New York, and maintaining this Flatiron location. And this year we're going to add 2 more locations as well. And then next year we'll be adding more. The way that we look at this is a few ways. One, again, going back to customer focus and centricity, make sure that you're servicing your customers in the ways they want to be serviced. There are people that want to try shoes on in person. They want to get the fit right. They want to touch and feel and smell and play with the leather. They want to know who we are. They want to like understand what we're all about, and they want to see things that maybe they wouldn't have been exposed to otherwise. And so we work really hard to make it a hospitable and fun and engaging process. The other reason to do it is, as we look at like the business on a long run basis, the best businesses out there that I know are all omni-channel. And if 1 out of every 7 purchases is made on the internet today, and that's been growing steadily over time, that's great. And we've been in the sweet spot there for a very long time, and it's benefited our business. But it also means, to invert that 6 out of every 7 purchases is not made on the internet. And so finding ways to find those shoppers or people who have a preference for a more in-person brick and mortar experience, we think there's a way that we can service that customer to do so efficiently, to do so with like a lot of pride and a lot of just, it's a very human business, which is why it's so much fun. And I'm very pleased to be able to lead it today. But we want to be able to do that in a way that is sustainable for the business. So part of it is sort of looking towards future growth and opportunities. Part of it's addressing our existing customers. And then part of it is also just like learning it. I don't think we can be fully excellent at our business and really understand our brand if we are leaving out such an important channel in our business. And so part of this is just intellectual, and just like it's a way to keep learning and keep trying new things. And of course, we have high confidence that we'll be successful. So we'll see how it goes. But I'm very excited that that's something we finally get to be doing after, for many years, we just deprioritized it for lack of bandwidth. And now we're finally able to start putting it more on the front burner. And early response has been great. And we're super thrilled with all the people that have come by to visit us in person. And I want to build it into not necessarily a big retail empire, but into an excellent one. I want to be known for our service. I want to be known for the experience.
Out of those 7 purchases, I'd imagine, if I had to guess, three or four of them are happening through multi-brand kind of retail wholesale as opposed to owned and operated retail. So like, but given that you care so much about delivering value to the end customer, is that retail wholesale channel likely closed for you guys?
It's difficult for us to do today. That's one disadvantage of our gross margin strategy that we talked about. By focusing on protecting the customer with price first and foremost, we preclude a lot of that wholesale opportunity. I'm okay with that today for a few different reasons. Number one, we really want to be vertically integrated because we want to control the brand, the messaging, our engagement with our customers. In case that it wasn't abundantly clear from all the other parts of this conversation, like we just think that is key. That is a relationship we want to own and continue to do so. It doesn't mean that we would never do wholesale. It just means that we can't really do so in a big way today. I do think there are opportunities to expand into wholesale if it makes sense over time, but we would almost certainly go slow, be incredibly selective. We've had requests or pleas from some of the biggest and best names that you can imagine. And we view it as like it's very nice, it's edifying to think that people want to sell our product, but we're not fully convinced that it's right for the brand today. And it's not to say we won't do it at some point, but it's just not our preferred method of growth today. And we're fortunate to have a lot of runway still on our existing growth model.
Why do we love Numeral? Well, here's the good, the bad, the ugly. The good is that over 1,000 e-commerce store owners just like you use them for sales tax compliance, including some pretty big brands like Ridge, Emmy, Nomad, and Graza. The bad is that none of us got into this to spend a ton of time on sales tax and admin, which is why Numeral is able to help you in 5 minutes or less get full coverage, deal with registrations, ongoing filings, and compliance. It just happens in the background. And the ugly is that not a lot of store owners know that sales tax is actually personally guaranteed. Said another way, that the states could end up coming after you personally if you're not on top of it. Even a modest $5 million store owner could have Nexus in 20 or 30 states. Again, Numeral helps you stay compliant, and they even guarantee their work. That's why we love them. Go and check them out at numeralhq.com. To turn the conversation to AI for a minute, is there a kind of top-down mandate for folks on the team to be experimenting with it and some kind of leash there? Is it something that you're using in your daily workflow?
Yeah, we've not done what Toby's done with Shopify to say go AI first. I like that though as an idea. We've started doing internal training sessions. So a few folks have stepped up and said we're going to start teaching the rest of the organization the different ways that you can start incorporating this in your workflow. And even in my day to day, like I find it very useful to especially when I'm stuck on a kind of a tricky type thought process or I'm just not moving quickly enough. I don't let it do my thinking for me, but I use it to kind of break through those log jams. And what we're finding is it does allow us to do more complex work faster. It does actually streamline some of those things we're talking about. The hope is actually that because we've been so focused on efficiency on the SG&A side, that we can continue to have a small but mighty team that can actually exert more productivity for hours spent. That ideally would be something we can continue scaling time and time again. And I think it's going to be one of those things where it'll be subtle. Some companies will see major changes, but it's just impossible to think that 2 years from now that this won't be an integrated part of everyone's workflow and process. So we're pro technology, we're pro iteration, and I see it already starting to add some value. And I'm excited for what it could do. I think it could help really keep costs down in a way that allows us to keep servicing our customers. And I think that it could accelerate some of the growth and developments and things that were previously taking a long time for us could actually help us grow faster too.
Connor, what would you say is the biggest win of the last 6 to 12 months? Maybe something that other brand owners can either get inspiration from or learn from?
Yeah, I think one thing that's been really fun for us, like the last 12 months, we'd done a black label back in I think 2014, 2015, where we wanted to be able to offer more like limited edition and this idea of something that not everyone gets to have. And there's something about that is kind of fun. It keeps it exciting. And I think about this. We've trained an entire generation of men and women on what quality and footwear can look like, and that's really exciting. And I think in many ways we just kept focusing on that, but we sort of ceded some of the fun and exciting, playful things that really were part of the reason why we started the business. So one thing I was really happy about was being able to kind of like sort of like almost revert back into a lot of really organically driven product development. So we've always focused on excellence in product, but we were doing a lot of like, the nth iteration of a different brown shade on our Captain, which is exciting, but not like compelling, right? It's interesting, and people might want a slightly more tan or a slightly more brown boot. Versus, we've probably had more new model launches this year than at almost any time in our history. And what's been awesome about it is like it's fun for us. It's engaging. We get to try new things. We get to be really critical, and we get to sort of see what works and what doesn't. So I've been really proud of the product team in terms of what they've been able to release. I've been really thrilled with like the end results. I wear our products every day, and so that's been nice. And what's cool is like our customers have really engaged with it, and we've been able to use that to continue driving organic growth and at the same time reducing our costs. So it's made the business stronger and better, and we've been happier and healthier for it. Takes a lot of work, but I've been really happy about that. And I think when we look forward now too, it's also given us all these other new growth avenues because of some of the seeds that we've planted already. We can now double down on those, and we can improve upon it further. We can increase the volume. And so I get excited about that kind of stuff. And also there's a part of me too that just enjoys doing hard things. And so novel projects really give me a lot of energy. I like it when there's chaos and you just throw me at something. Opening 3 stores in Q4, not an easy task, but super fun and engaging. And our team there did a great job as well. And having things that we haven't done yet. Manufacturing is nice and new for us still, so we're still learning that. I think the future is going to be really interesting. And as we think about like the current tariff scenario and other things, it's going to create a lot of changes in our supply chain. But I think that a lot of those are going to be probably net positive for us regardless. And I think that we're going to be a better business in 2 or 3 years as a consequence.
To play back your Churchill quote, is he the one that says never let it go to waste? What does he say?
I think there's I think it was well maybe it was I think it was Napoleon said it was, or no, it was either Napoleon or Churchill, or maybe it was Abraham Lincoln. They said something to the effect of never let a crisis go to waste, or maybe it is maybe it's the never interrupt your enemy when he's making a mistake.
Yeah. Yeah. Well, there's certainly a lot of chaos with brands across the ecosystem with tariffs, and sounds like a good opportunity for you guys to lean in and take market share.
We would love to do that, to be very clear. I also at the same time have a ton of empathy because, this is affecting us, to be clear. It's not all positive. It's actually absolutely it's negative. On a relative basis, we might be better positioned, and we're working our tails off to make sure that we can seize those opportunities. But I also have a ton of empathy for the brand owner, the founders. Like we're still in that same boat, and I know how hard a lot of other people work, and what they really just want to make good product and help their customers. That's all they want. This stuff is a huge distraction. It's a huge waste of time. And I agree with that as well too. But I also do think that, we have kind of sort of labored in obscurity, and we're fine with keeping a low profile. We're going to continue doing that because it's not about us, it's about our customers and it's about the brand. But I do look forward to these disruptive periods for the simple fact that it kind of shows you, you think you've built a really good business and you think you've been putting in the time and the effort for this long-term goal. This is where we get to actually prove it. Like, did we actually build the quality business that we think we did or not? And so I would say I'm excited to see what that will reveal. I think that's exciting over a long period of time. But it's not without its risks. And as I told my team, I said, everyone be ready. This is going to be a gnarly year. Whether it's tariffs or a recession or other things, like we should not expect that it'll get easier. It's going to get harder. And that's okay because we're tough and we can handle it. But everyone here needs to either be performing and meeting their expectations, or the expectations you're working at least as hard as I am. And if you can't do either of those, then that's going to be an issue. And we're going to make sure that we're, in the meantime, focused on what matters. And if everyone can execute, we're going to have a really exciting 26 and 27 and beyond, but it will come with sacrifice. And what's great is, you try to scare people and they just kind of go, yeah, okay. Because I think our team's been through it. And I think, to their credit, like, they understand. And I'm very, very fortunate. We've got a great group of people that support this business. It's not a one-man show by any means. It's a 420 person plus show if we include everyone in our factory. And people work really, really hard to do the right thing, and very proud of where we've been.
That's a great rallying cry to end on. So, Connor, is there anything that you're seeking from the universe? Where should people go and check you and the brand out? Anything you'd like to, from our listeners?
No, if you're not familiar with Thursday, I'd say absolutely come check us out. Like we've been doing this for long enough that we feel really good about what we're doing. But I very much think that we're just getting started, and our ambition is to we really want to see how great we can make the business. And what's interesting for us is as we get bigger, we actually get better. That is the hope and expectation anyway. And I think in many ways we're still not where we think we can go. And I really look forward to where we're going to be 5 years from now in terms of the quality of the business and the quality of the products and the quality of our customer service. I think we're going to be omni-channel. We're going to be all around the world. We're going to have new product categories that we're not even selling today. And I think we're going to be known for new products that we haven't even introduced yet. So those are the things that motivate me. And I think we're just getting started.
Connor, thanks so much for the time. Really enjoyed the conversation and look forward to next time.
Absolutely. Thanks, man.
Hey, thanks for tuning into the show with Connor Wilson. I actually love how hardcore he is and honest about the challenges of building a modern day brand. Look, we're super open to feedback and would love to hear from you. DM, comment, Twitter, LinkedIn. We'd love to just hear what you think, the types of guests you'd like to have on, types of topics. Thanks for joining and look forward to having you on the next one.